I'm back. Last video was kind of quick, so I just decided to record this one quick. Um, the audio is kind of messed up, so I'm gonna just put the headset on my head. But so this is essentially just video 2 how traders actually make money step by step, like how to kind of get a beginner understanding of how to read the chart. So now you know what day trading really works, like how it works and how like what it is essentially. But how do day traders actually decide when to buy and sell? It's not it's not random. Like I can show you some examples. In the last video I told you trading is like buying low and selling high. But the real like question is, how do I know when to buy? How do I know when to sell? Everything traders do is based on charts. A chart is just a price moving over time. Let me make my webcam smaller. You see, it's just price moving over time, up, down, whatever. But inside that movement, you can catch patterns. I'm not really like a pattern type of guy, but some patterns are pretty useful. Like I'll explain support and resistance. The first thing traders look for is something called support and resistance. It's like a support floor. Like let me mark this one out for you real quick. Like you see right here, floor here, and there's always new floors. It's never, that's a support and resistance level. Yeah, okay. I think you get the idea. Resistance is like a ceiling. So it's just this but vice versa. Like stuff like this. I want my webcam even smaller. There we go. So like I was saying, resistance is like a ceiling. It's a price where the market keeps getting pushed down from. Like for example, imagine a ball, you know, like bouncing in a room. Every time it hits the floor, it's gonna hit the ceiling if you do it hard enough. That's exactly how price drops when it hits ceilings and resistance, support and resistance levels. An entry explanation, like examples of when you get like your confluence to enter a trade, is if price is near support and it looks like it's about to go up, and you can tell that by previous patterns. You can see price has already bounced off that level multiple times, so you can get a cue that you get a good confluence that it's going to do the same thing again. And if price is near support and it looks like it's going to go up, then you know you buy. That's a good confluence. If price is near resistance and it looks like it's going to drop, then you sell. Or vice versa, you get what I'm saying. And confirmation is key. You can never, I mean, it's good to have a good amount of confluences and indicators or whatever, but once you have too many, then you kind of start to throw yourself off. But but the key is to not guess. You wait for confirmation. That could be a strong move up, a candle closing in a certain direction. That's my boy Blue's favorite strategy. You feel me? That 30-minute candle, hour candle, or momentum picking up. Then you wait, and then you enter your trade. And stop losses and take profits are like how much you're risking, how much you're willing to lose, how much your profit target is, like the ratio to loss and win. So like how I was explaining last video, risk management. Every trade has two things: a stop loss where you exit if you're wrong, a take profit where you lock in your win. Before entering, both are already planned. Like you should already have a game plan before you enter, how much you're willing to risk, on how much you're willing to take profit from. Like you're risking 200 to make 300. That's not a good risk to reward. So like essentially a real trader looks like this: price hits support, you wait for confirmation, then you enter the trade. Stop loss below support, take profit higher. So for example, you see this level of support. You already see it had a reaction off of it, and then you see it come back down, and you could have taken this long here. Once it comes and tests that level again, and it would have been, you could have targeted the ceiling again, or you could have had multiple take profits. It could have been like take profit 1, first level, take profit 2, that third level marked out right here. And your stop loss, honestly, it could have been either at one of these 2 levels, or you could have even put it all the way down there. Hold on, I need some water, bro. So stop loss below support, then profit higher up. Then you let it play out. No emotions, no guessing. I recommend having, so if you have a Hero FX, you can open a trade locker and you can place your trades through trade locker. If you're paper trading, you don't have an eval yet, or funded, express, whatever, you can place your trades through there and then open trading view and watch the chart through trading view. So you don't watch the numbers fluctuate, because that kind of messes with your psychology and emotions a little bit when you first trade out, because you'll see like numbers going up and down, and you'll kind of react off that. And this matters because this is what separates beginners from real traders. Beginners, like, they chase the price. Real traders wait for the setup. And obviously, when you first start out, you're going to chase a lot because you're a beginner. But that's a lot of psychology, and you got to really lock in with your weaknesses, let's say. Like, if you're impatient, if you're a gambling addict, per se. I know a lot of people that just like to gamble. But at the end of the day, scared money don't make money. But now that you understand how traders actually enter and exit trades, just off this simple support and resistance concept, not like, there's obviously more than just this, but in the next video I'm going to show you the biggest mistakes that makes beginners blow accounts fast, that I've gone through, I've seen my friends gone through, and the people in my students in the Discord that they've gone through. And it's just simple stuff. Everybody does this, but there's ways to overcome it, and I'm gonna be explaining that in the next video, so you won't make the same mistakes that I did, and essentially not speed up the process, but help you get a better understanding for trading.